FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is 3/12/20. We've seen much turmoil in the market. Gold ricocheting back and forth. The stock market down 2,000 points one day, up 1,000 the next, and on and on and on. What does it mean? What should you do? Well, that's the question. Tell us what you think you need to do here to survive this tumultuous market and how long you think it's going to last. We'd love to hear from you. KL@kerrylutz.com. That's the email address. Well, our good friend Al Caicedo is with us now. And Al, hey, what can you say about these markets that hasn't already been said?
Well, let me tell you, what a crazy ride, huh?
Really?
It's interesting that, there's a lot of, a little bit of hysteria going on with this also. There's that fear factor that's going on with this. Oil jumped in there. Treasury's going down. It's almost like a perfect little storm happening all of a sudden that is just taking on its own life form and created havoc in the markets here.
Yeah, well, we've been talking about this, you and I, for a while, that there was going to be havoc in the market at some point, right? And here we are. It's happened. If it wasn't the coronavirus, it probably would have been something else, right?
Oh, yeah, absolutely. Because, and you and I have spoken about this, and we said the fact that how much manipulation is going on by the Fed itself, understanding that, how real is the stock market the way it's going. The economy is they keep touting that it's good. However, we're taking some real extreme measures to make sure that the Fed is still feeding the markets, and the markets are addicted to the Fed. And then you throw this thing into it, and this is all really interruption of supply lines, interruption of people's lives. Look what's happened, just yesterday, an entire country's got quarantined. And what does that mean? And how will people work, and how will it affect the average individual if they can't go to work and they can't, telecommute and things like that. So this has the potential for a lot of things, even, and then you put the engine of fear behind it. It has the potential to, I think, that unless this thing gets under control quick, that it could take us into that bear territory that we've been thinking that we're going to get for a while.
Well, do you think that that this is the fear of this virus is being overblown? I mean, this isn't the Black Plague, the Black Death, right?
It's not, and we've gone through the Zika virus, we've gone through all these different viruses that that have hit us, and for some reason, this one, even with the stats that are out there, that 80% of the people that get it are not going to be seriously ill, even with the fact that the people that are getting mostly affected are the elderly. For some reason, I think with this one, there's just so much going on with social media and everything like that is just spreading a lot faster, and people are not calming down and taking a deep breath and taking a realistic view of this, that flus take out more people in a year than this does so far.
Mm-hmm. And it's interesting here, Al. I'm looking at the map of coronavirus, and it's the New York Times, so of course it's not up to date and it's inaccurate. But the trend is the northern states, especially New York, Northern California, and really that's the center of it, have the most cases. The southern states, look, you got Florida, which has the same population as New York. New York's got over 100 cases. There's 729 cases nationwide, 27 deaths. That is a tragedy. Let's not belittle that. But a lot of people, like you say, don't even get symptoms. A lot of people recover. It's really it's dangerous for the people who are in that vulnerable category, compromised immune systems, elderly, etc. But really, it's not quite we've seen worse than this, right? SARS and MERS and all that.
SARS and MERS have been so far worse. Now, I guess the unknown here is that it hasn't hit here yet as hard as it hit like Italy or something like that. Because as of today, there's more than 750 cases that have been are known here in this country, with about, I think it's 26 deaths nationwide right now. 27, I think it's up to, but I'm not going to. Yeah. Yeah. The impact of that is that, with 80% of the people not really getting, how is that going to work out? And then how long is it going to take for the CDC to come up with a virus, an antidote to all that kind of stuff? So, how long does this persist? So those are all issues that we have. And then you throw the fact that, we have that oil crisis going on right now, as far as, the Saudis and the Russians are going at it. So you have all that turmoil, and I think it's just, people get angst on it, but I think this is also a time for everybody to reevaluate things in their own portfolios, because I think this is just like the first, this is the first shot over the bow here, and I think that this is a warning shot to let people know that, hey, we're only one tweet away. We're only one virus away. We're only one of everything away from things unraveling very, very quickly. And we have to start looking at what kind of lifeboats, what kind of life preserves do we have around our portfolio, especially when you're getting close to retirement or you're in retirement and you need that asset to provide the income and to maintain lifestyle. So those are things that really need to be looked at right now. And if this doesn't motivate you, then I think you're in for a rough time. Yeah.
So the market is just looking for some reason to react, to go down. And this was the reason, effectively, right? I mean, isn't that what it comes down to? If it wasn't this, it would have been something else.
Oh, yeah. Yeah. Because of the fact that this is, you have to understand we've been, mostly living off of whatever the Fed's been doing. And the Fed's been feeding this and providing the liquidity for the markets. And look at the measure it took, just last week, 0.5 point down. And then we're expecting them, when they meet again here, that they're going to take it down again. And all of a sudden, negative interest rates are not an unrealistic thing in this country. We had the Treasury go under 0.5, basis points. So, it's time to take some type of action, I feel.
Yeah. So interest rates aren't going to cut it, though. I mean, they've just cutting it to zero. Is that really a solution here?
FSN Radio. It's all about what's next.
Lumina Gold, ticker symbol LUM on the Toronto Venture and LMGDF on the OTC, is yet another of legendary mining investor Ross Beaty's Lumina Group. It's advancing the largest primary gold deposit in Ecuador. The resource is estimated to contain 16.7 million ounces of gold and 2.2 billion pounds of copper. At just $7 US per ounce gold equivalent, it trades at an incredible 13% of its net present value. More good news is on the way with an updated PEA study expected in Q2 of 2020. It has unparalleled infrastructure. There's grid power to camp with plentiful, inexpensive hydropower available. It's close to 2 ports and is just 8 kilometers from a paved highway. Water is plentiful. It's at low elevation, and the closest community, which is very supportive of Lumina's effort, is just a 7-kilometer ride. With all this going for it, it's likely to follow the typical Ross Beaty formula, which means big returns to shareholders. Find out more and sign up for notifications at luminagold.com. That's Lumina, Lumina gold.com.
The Financial Survival Network. It's all about what's next.
The way I look at it is it's more of an illusion than a solution. Because you're going to take these, you're going to continue to take these interest rates down. Look what it's done to Japan. Look what it's done to other countries that have been negative over the last couple of years. And I still haven't seen that as an overall positive move. I just haven't seen it. If somebody else has seen it positive, I would love to speak with them, because I just haven't seen it. We've seen what other countries have done when they've gone negative, and so far we haven't seen any positive come out of it.
We've not seen any. It doesn't work. They know that. I don't think they really want to try it because the U.S. look what's happened to the dollar, too. The U.S. was the last major country in the world that didn't have negative rates. Now we're down to under 1% on the 10-year, and we're getting close to 1% on the 30-year. When you look at what's happened to the dollar in the past week, it's gotten slaughtered.
Yeah. So, we have so many things that are going on right now that, as small investors, because they're usually the last ones to take the hits on everything. They're the last ones to get out. They're the last ones to get in at the wrong time and everything else like that. It's really time to sit down and make sure that, your exit plans are solid.
Yeah, agreed. So what do we do here? I mean, what is our exit plan for this market? And should you get out of it? Is this just going to be temporary? We used to think under the Dow theory, when I learned it 40 some odd years ago, when you had a rapid, what they called intermediate trend that could last anywhere from 30 days to 90 days, it always was mistaken for the beginning of the next bear market, but usually was not, and it provided savvy investors an opportunity to jump on. Is there a reason that logic wouldn't apply now?
Well, the thing is that so many things are illogical, and the thing is that under traditional economy, we would rely more on some of that. The issue now is that we have the Fed and the government. Trump is about ready to come out with a bunch of stuff here too, to try to on the economic side, and the Fed's going to try to take drastic measures. So because of those variables, it is really hard to say what really will work. This is what's really making things difficult. Not for advisors, for individuals themselves, is because they're throwing things into the fire that typically are not used. And how would that react, and how would the economy react to that? Those are the unknowns. And can those things really work? Is fear greater than those things? I think we'll get a little bit more answers after, as of today, the market reacted positive, waiting on some of the stuff that is going to be coming out of the White House. So we have we're sitting on a positive day so far. Once we digest that and see what those initiatives are by the White House, then we'll have a better understanding as to how long this thing could last.
Yeah, you think that there's anything that the White House and the Fed can do, really? I mean, we had an 11-year bull market here, Al. And
I'm of the belief that I think the dam is starting to break and starting to show cracks, and this has the potential to be the one that breaks it. I mean, this whole little storm that we're having here has that potential. Depending on what measures these the Fed and the government take. But we are due for a strong correction. Price and earnings are way out of whack. We're starting to see a lot of things that need to come back to norm. And to get it back to norm, you're gonna need a good 30 to 40% correction to get it back to where the numbers make sense again.
Yeah. So this isn't the time to be bargain hunting, is it?
Oh, I wouldn't bargain hunt yet. We don't even know what the bottom is with this yet.
Right.
I think this is the time to be vigilant, and the time to make sure that, again, if you're close, make sure that you've taken steps to protect some of the money that you need to, and the money that you're going to live on is the money that you need to have protected. If you're younger, then of course time is on your side, and everybody's survived swings and all that kind of stuff. So different strategies for different age groups.
Yeah. All right. Well, I think that pretty much sums it up. If you're younger, you can afford to wait. If you're older, you maybe should be very much more defensive. Hey, one thing we didn't talk about is bonds. The value of bonds. There's been a real bull market in bonds, and it's continuing.
Yeah, well, because it's a direct correlation to interest rates. So the bond market is staying strong, and that's an area that I think that people should hopefully are sitting down with their advisors and exploring.
Right. Hopefully so. And all right. So to sum it up, then, what's the best course here? Do you get out and think about coming in later, or do you just try to white knuckle it out?
Well, I've never been a white knuckle guy, but again, we deal with mostly pre-retirees and retirees only. So our goal here is to protect the asset. So our number one goal is to make sure that our clients have their assets in place and that they're there when they're going to need them. But every situation is different. So blanket advice is never a good advice. This is a time that hopefully you have an advisor that you are trusted in, that's been communicating with you, and that it's looking at you as an individual and caring about what your goals are and how it all relates to the turmoil we're going through today.
All right. Well, we like that advice. It sounds sound. Everybody's different, but remember that when you for every dollar you lose, you got to make two back to come out even, and that's really what it's about. Al, as always, thank you. Questions, comments, just email us, kl@kerrylutz.com. Al, how do people get in touch with you?
Hey, you can look us up on the web, summitgp.com, or like us on Facebook, CKS Summit Group, or they can always call us 586-286-5820.
All right. Hey, and like I said, kl@kerrylutz.com for your feedback. Twitter feeds @KerryLutz, Facebook page, Financial Survival Network, our home site, financialsurvivalnetwork.com. And that's where you can sign up for our free newsletter. Al, as always, thanks. We'll talk to you again real soon.
All right, buddy. Take care. Have a great day.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.